If you have ever got a bank loan for education, business, or even a house mortgage, you know the pain. Unless you're a multi-millionaire, you will lose sleep first in getting a loan and then in paying the loan. And don't get me started on the questions you need to answer and personal details you need to give to get your loan approved. How convenient and wonderful would it be if you could get loans privately and instantly in seconds? Aave is your answer to that. Welcome to Crypto Skills, the channels that make all the complicated crypto topics easy to understand. In this video, we are going to explore the Aave Protocol, which is one of the prominent decentralized finance applications in the crypto space. Make sure to watch the entire video, as we will get into not only what Aave is, but also the exact calculation of how its native token Aave can help you retire a decade from now. But please note that this is not financial advice. I will always encourage you to do your own research, and this video can be a part of your research. Let's jump right in. What is Aave? Aave is a decentralized finance platform that allows users to lend or borrow cryptocurrencies without the role of any centralized intermediary or institution. Similar to your bank deposits, Aave gives interest to the depositors, and similar to bank loans, it charges interest from the borrowers. But unlike banks, you deposit and borrow cryptocurrencies instead of money. Also, the interest rates of Aave are determined by an algorithm instead of any central authority. Aave was originally launched on the Ethereum blockchain in 2017 as ETH Lend, but later rebranded into Aave Protocol in 2020 and expanded to other blockchains like Avalanche and Harmony apart from Ethereum. So how does Aave work? Well, Aave Protocol works on a smart contract mechanism. In simple terms, what that means is that the lenders can lend their money to a smart contract and earn interest on it. The lend's money goes into a pool of funds which is maintained by the smart contract. Meanwhile, the borrowers can borrow money directly from the smart contract. The whole process is automated and facilitated by the code or algorithm. So there's no entity actually responsible for holding your funds in trust. You just need to trust the computer code. Even the rates of loans are determined by the algorithm and keep on changing automatically based on the available liquidity on the borrowed smart contracts. So if, say, Ether smart contract has more borrowers than lenders, that is, fewer people have deposited Ether than the people who want to borrow Ether, then the interest rates will rise, which will discourage borrowers to borrow Ether and encourage lenders to deposit more Ether so that balance is achieved. But what if the borrower doesn't return the cryptos? Well, this risk is mitigated by something called over-collateralized loans. Usual collateral loans from banks work like this. You want to buy a house and you make 20% of the down payment and take a loan for the rest 80% and keep your house as collateral for the bank. This means the bank can take your house away if you fail to pay back the loan. Well, the Aave loan kind of works in the same way. Due to the risks and the uncertainty, cryptocurrency loans are over-collateralized, which means that if you want to borrow $100 worth of USDT, you must deposit $120 of Ether as collateral. I get it. It seems crazy. Why would you deposit more money than the loan amount you need? Let me explain. Let's assume you deposit $120 worth of Ether to receive a loan of $100 worth of USDT. The USDT, being a stablecoin, has wide acceptability. You can trade it on any crypto exchange for any other coins or tokens. Say you traded $100 worth of USDT back and forth and made some good fortunes. Later, you decide to give the borrowed amount of $100 worth of USDT back and receive your initial collateral deposit. Fortunately, after some time, the value of Ether might have appreciated and your initial investment of $120 could be, say, $200. This way, you could enjoy value appreciation with your initial investments in Ether, but also make some profits with the borrowed money. But before you get too excited, this is a double-edged sword. Like how $120 worth of Ether can go to $200, it can also go to $60. Now, if the price of your collateral cryptocurrency goes down beyond a certain limit, Aave has a liquidation threshold in place that will automatically sell your collateral to cover your loan and protect the lenders and investors. In conclusion, the working of the Aave Protocol is simple, decentralized, and apparently safe till now. And with the growth in the crypto markets and rise in the number of crypto investors, I personally believe DeFi applications such as Aave will prove useful. Now, if you're convinced of the working mechanism of Aave, let's see if its native token Aave can make you enough money for you to retire 10 years from now. The Aave token is the governance token of the Aave Protocol. the Aave token holders can vote and decide the future activities of the platform. That is, Aave holders can vote on Aave improvement proposals that are meant to improve how the protocol works. There is a maximum supply of only 16 million Aave tokens. This is a good thing for any asset. With a limited supply, the price will increase with the rising demand. So how many Aave tokens do you need to retire in 10 years and live comfortably off of for the rest of your life? For this, the first step is to estimate the cost of living. The cost of living varies significantly. My estimate could be different from yours, so make sure you change that assumption for yourself. Assuming you want to retire in the US, the current cost of living is estimated at approximately $4,500 a month, which is $54,000 for 1 year. The median inflation rate in the US for the last 30 years has been 2.4%. So taking 2.4% to be the inflation rate per year, the cost of living 10 years from now will be approximately $68,450. Secondly, the most important part of living off passive income is a regular inflow of money from your investments. The Aave protocol itself helps you earn that from your cryptocurrencies by lending, but Aave tokens themselves can be staked, that is, locked within the protocol. The staking is done on the platform to act as a mitigation tool in case of a shortfall event. During a shortfall event, the protocol uses 30% of the assets locked in staking to cover the deficit. As an incentive to supply liquidity to the pool, the protocol rewards the liquidity providers. The yield of rewards usually varies from time to time. At present, for example, staking rewards are 6.73% annually. But as we have seen from other mature cryptos, the staking rewards generally settle at 5%. For this calculation, I've assumed that you will earn a 5% annual return on the value of your coins after 10 years. Ideally, this 5% should be sufficient enough to cover your cost of living every year. The third and final step is to estimate the price of the Aave token 10 years down the line. This is perhaps the most difficult step. Cryptocurrencies have been volatile in the past and probably will be so in the coming years as well. But now that you understand the business and potential of Aave Protocol, we can estimate the price of the Aave tokens based on relative pricing. Market capitalization of the entire crypto market currently is approximately $1 trillion. The value of the liquidity locked in the Aave Protocol is a little less than $10 billion. So around 1% of the entire crypto market is locked in the Aave Protocol. Now, I'm not saying that the price of an Aave token is directly related to how much liquidity is locked up in the protocol, but you will agree that as the crypto market grows, the importance of such critical DeFi projects will be realized. And more people, entities, institutions would want to be part of the governance of the protocol. This will increase the demand for Aave tokens, and since the supply is limited, it will drive up the prices. So, for predicting the price of Aave tokens, I have assumed that it will grow by at least 50% of the increase of the value of liquidity locked in the Aave protocol. Let's see if we can forecast the liquidity 10 years down the line. As per the report of Prophecy Market Insights, the global Web 3.0 blockchain market is expected to grow by a compounded annual growth rate of approximately 45%. Even if we assume that the growth in the Web 3.0 market will not exactly translate into growth in the price of crypto, we can assume that the overall crypto market cap will be at least grow by half. That is at the rate of 22.5%. Therefore, in 10 years, the crypto market will grow from $1,000 billion to approximately $7.6 billion. Assuming that the liquidity locked in the Aave protocol maintains the same proportion as now, 1% of the market cap, that is $76 billion worth of cryptos, will be with Aave. This is a 7.6 times increase from the current market cap of $10 billion. Obviously, that will entice more users to join the protocol by buying Aave tokens. Even if that translates into half the increase in price of the Aave token, it will be 3.8 times more than the existing price of approximately $95, which is $361. This is a conservative estimation for two reasons. First, if Aave Protocol continues being as useful in the crypto markets, the proportion of liquidity locked will be way more than 1%, and so will be the interest in the Aave token. Secondly, as more awareness is created around crypto, more people will participate, and the coins of the projects that create value, like Aave, will outperform the others. Even then, it's better to be conservative in the crypto world. Now to the big question I've raised at the beginning of this video. How many Aave tokens do you need to retire in 10 years? Considering our assumptions, the number of tokens required for you to live off of would be approximately 3,792 in 10 years, which approximates to $360,000 in today's value. That's it for this video. If you've enjoyed this video, please hit the like button to show your appreciation for our efforts and consider subscribing so you don't miss our next bite-sized explainer video on crypto. I'll see you in the next video. Take care.